As the U.S. stock market is closed for the weekend, we are looking at the final figures from the last trading session on Friday, October 31st, 2025. And what a session it was for Illumina, ticker symbol ILMN. The stock finished the day at $123.54 per share. That was a staggering gain of $24.53, an explosion upward of nearly 25% in a single day, a 24.78% gain to be precise. Now, when you see a move like that, your first thought might be a buyout offer or some speculative rumor, but this was something far more fundamental. And it completely shattered the narrative that has defined this company for the past 3 years. This was a direct, violent reaction to their third quarter 2025 earnings report. The expectation for Illumina, frankly, has been grim. This was the former king of genomics, a high-flying tech darling that absolutely dominated its field, which then proceeded to implode in one of the most criticized corporate acquisitions in recent memory. The consensus belief was that Illumina was broken, trapped in a multi-year recovery and bogged down by the disastrous Grail acquisition that management fought tooth and nail to keep, against the wishes of regulators and activist investors like Carl Icahn. The expectation was for more of the same: stagnation, margin pressure, and a long, slow crawl back to relevance. But the reality, as delivered by the numbers on Friday, was something else entirely. The company didn't just beat earnings expectations, it beat them soundly and then raised its forecast for the rest of the year. Illumina reported non-GAAP earnings of $1.34 per share, smashing the analyst consensus of $1.16. Revenue came in at $1.08 billion, clearing the $1.07 billion estimate. But the real story, the catalyst for that 25% surge, was the guidance. Management raised its full-year 2025 non-GAAP earnings forecast to a range of $4.65 to $4.75 per share, a significant bump from the previous $4.45 to $4.55. They also raised their operating margin targets. This wasn't just a flicker of life. This was a signal that the core business is not only alive, but accelerating. This is the kind of move that sends shockwaves through portfolios. This wasn't a slow, steady climb like you might see in Apple stock. This was an explosive gap up that likely triggered margin calls for short sellers. Anyone logging into their Fidelity Investments, or Robinhood app accounts on Friday morning saw a number that looked like a mistake. This single-day event completely reframes the investment case for this stock, moving it from the broken company pile to the turnaround story pile in about 6 hours. So let's break down this recent action. A 25% gain in one day is a massive institutional repricing. The trading volume on Friday was colossal, far exceeding its daily average, as algorithms and large funds scrambled to adjust their positions. This wasn't just retail traders on the Robinhood stock trading platform chasing momentum. This was a fundamental reassessment. But here is the tension, the new expectation versus reality. The analyst community is now split right down the middle. On one hand, you have firms like Evercore ISI, who see this as the beginning of a new cycle, and they raise their price target to $142, implying more upside. On the other hand, you have firms like JP Morgan, who also raised their target, but only to $105. At a closing price of $123.54, JP Morgan is essentially telling the market that this 25% jump was a massive overreaction, and the stock is now significantly overvalued. This creates a fascinating battleground. Who is right? Is the stock just getting started, or did the relief rally get ahead of itself? The key to answering that question lies in why the numbers were so good. It comes down to two things: the new CEO's strategy and the NovaSeq X. Illumina's business model is at its core a classic razor and blades model. They sell the large, expensive sequencing machines, the razors, and then generate a long, recurring tail of high-margin revenue from the chemical reagents and consumables that those machines require to run. For the last couple of years, the concern was that the transition to their new flagship machine, the NovaSeq X, was sputtering. But the Q3 report showed this transition is not only on track, it's exceeding internal milestones. The company reported that the NovaSeq X now accounts for over 75% of high-throughput volume and over 50% of high-throughput revenue. This is a huge deal. It means customers are adopting the new razor faster than expected, which in turn locks in years of future blade sales. This is the engine of the company. It's the same dynamic that makes NVIDIA stock so powerful. By controlling the essential hardware, they create an ecosystem. The second piece of this is where that growth is coming from. CEO Jacob Thaysen, who was brought in during 2023 to clean up the Grail mess, has been adamant about refocusing on the core business. He highlighted that the acceleration is being driven by the clinical market, which now accounts for a massive 60% of their sequencing consumable sales. This is critical because the other side of their business, research and government research, has been weak due to uncertainty around NIH funding and tighter budgets. By showing robust growth in the clinical segment, think oncology, genetic disease testing, and reproductive health, Illumina is proving it can grow even if the research market stays soft. This clinical focus is their path forward. It's a much more durable and predictable revenue stream. This is the kind of deep operational detail that many investing sites and social media threads miss. They see the 25% pop, but they don't see the engine under the pop, which is the successful execution of the NovaSeq X rollout into the clinical market. For those unfamiliar with the company's background, Illumina is not just another biotech. It is the foundational picks and shovels company for the entire genomic space. Its technology is the standard. For the better part of 2 decades, if you were a research lab, a pharmaceutical company, or a clinical testing facility that needed to sequence DNA at scale, you were using an Illumina machine. This gave them a near-monopoly position that drove their stock to incredible heights. Then came the Grail acquisition. Grail was a company Illumina itself had spun out, which was developing a blood test for multi-cancer early detection. In 2021, Illumina's management decided to buy it back for over $7 billion, against the explicit warnings of US and European regulators. What followed was a corporate disaster. The EU blocked the deal and eventually forced Illumina to divest the company, which it finally did in June 2024. The entire episode cost billions, destroyed management's credibility, distracted the company from its core mission, and led to the stock price collapsing from over $500 to under $100. This is the context that makes Friday's 25% surge so potent. The expectation was that Illumina was permanently damaged, a company that had lost its way. Friday's reality is the first concrete, undeniable evidence that the new CEO strategy is working. The company is post-Grail, it is leaner thanks to better cost discipline, and its core razor and blade business is accelerating, not shrinking. This is a classic turnaround narrative. For investors who do their own self-investing, this is the moment where the story changes. This isn't just a technical bounce, it's a fundamental shift. Traders using sophisticated platforms like Interactive Brokers, with its Interactive Brokers trading tools, would have seen the massive influx of institutional buy orders in the pre-market, signaling that this was a serious move. It's a far cry from the simplified SoFi active investing or Robinhood investments platforms, which are great for access, but may not provide the deep market-on-close data that showed the scale of this repricing. Now we have to look forward. What happens from here? The bull case is that this is just the first inning. The NovaSeq X upgrade cycle is still young and has years to run. The clinical market for genomics is expanding rapidly. With the Grail distraction finally in the rearview mirror, management can focus 100% on execution. Add in a $120 million buyback, and you have a recipe for a sustained recovery. In this view, $123 is still cheap, and the holdout analysts at JP Morgan are missing the new trend. The bear case, however, is equally compelling. The stock just jumped 25% in one day. It is now trading significantly above the consensus analyst price target of $115. The market may have just priced in the next full year of good news in a single session. Furthermore, the risks that plagued Illumina haven't vanished. Competition is coming, with Roche expected to enter the market in 2026. The research market is still weak, and China, a major growth market, is still facing export restrictions. Bears would argue that this is a classic sell-the-news relief rally, and the stock is now vulnerable. This is where decisions get difficult.